Good morning and welcome to the Killik and Co market update. Last week we talked about the sell-off in growth stocks, and that's a trend that we've seen continuing into this week. Markets are worried about a rise in inflation, and that is leading them to be worried about a potential rise in interest rates. Historically, growth stocks have performed poorly when interest rates are rising, particularly those that have high levels of debt. This week, the chairman of the Federal Reserve, Jerome Powell, gave another speech, and he did say that he expects inflation to rise as the economy starts to reopen following the coronavirus. He did say that he expects this rise in inflation to be temporary and that Fed still expects the interest rates to be kept low for the foreseeable future, but nevertheless, the market still continued to sell off following his speech. This week we've been looking at the Scottish Mortgage Investment Trust, which is a constituent of the FTSE 100, and it's a very growth-orientated investment trust with large positions in Amazon and Tesla. If you take a look at this chart here, you can see the trust has sold off heavily recently, losing about 30% of its value in the last couple of weeks. That said, it's still much higher than it was before the first lockdown started. Its large position in Tesla is one of the key reasons for the recent sell-off in this investment trust. As you can see by this chart here, Tesla shares have sold off very heavily recently, also following an incredibly strong run. Tesla recently told the market that it had invested $1.5 billion into Bitcoin, and I think that was taken by some investors as a rather strange move, and that has contributed to a recent sell-off in the Tesla share price. This week we've got a situation whereby the Bitcoin price has sold off, leading to a sell-off in the Tesla share price, and that has contributed to a sell-off in Scottish Mortgage. The UK budget took place on Wednesday this week. There had been some concern about a potential rise in personal taxation to raise money to cover the costs of the coronavirus, but at this stage nothing has been announced, although there was a rise in corporation tax from 19 to 25%. The Chancellor has also announced a so-called tax day, which will take place on the 23rd of March, and so it's possible that more changes might be announced then. Overall, the market reacted quite well to the budget. It was very much geared towards boosting economic growth rather than austerity. The economic upgrades for growth in the UK were upgraded, and that led to a positive reaction in the banking sector. The Chancellor has also extended the stamp duty holiday in the UK, and that was good news for the house building sector, and we did see some strong share price rises there, and that will also probably be good news for the banking sector. Finally, duties on alcohol were removed, and that is good news for pubs and restaurants, and we did see some strong price rises in pub companies such as Wetherspoons. Retail banks have struggled in recent years because interest rates have been so low, and it's very difficult for them to make money from loans. So we were quite interested this week to see that Lloyds Banking Group has announced plans to buy up properties and become a private landlord in order to generate revenue from other sources. Lloyds is following in the footsteps of John Lewis, which announced similar plans last year. So we'll be watching very closely to hear more about the extent of Lloyds' plans in this sector. Moving on to have a look at next week, we've got results out from Deutsche Post. That's it from us. Enjoy the weekend, and we'll see you next Friday.